Okay, so let's jump right in. There's a massive shift happening in finance right now. I mean, a really big one. It's all about bridging the gap between the physical stuff we own, things like buildings, gold, maybe even a piece of art, and the digital world. We're talking about real-world assets, or RWAs, and believe me, they are set to completely change the game for how we all think about investing.
So just how big are we talking? Well, get a load of this number. $16.1 trillion. And no, that's not what the market's worth today. That's the projection for where this is all headed by 2030. It's just a mind-boggling figure, right? And it really tells you why you've got to pay attention to what's happening here.
And look, this isn't just some number pulled out of thin air. We're talking about a forecast from heavy hitters like the Boston Consulting Group and ADDX. When giants like them start throwing around numbers this big, it's a huge signal. It tells us we're way past the niche idea phase and heading straight into a full-blown financial revolution.
All right, so how are we going to tackle this huge topic? Here's the game plan for this explainer. First, we'll look at the sheer size of this new market. Then we'll get into what real-world assets, or RWAs, actually are. After that, we'll unpack how tokenization unlocks all this value, check out the key players driving everything, and finally, we'll peek into the future and see where this is all going.
Okay, first things first. Let's really wrap our heads around the scale here, because this isn't just a small step up. We are talking about an absolute explosion of value.
And this chart just lays it out perfectly. Right now, the market is, in the tens of billions, which is already a lot. But by 2030, we're looking at a jump to over 16 trillion, T-R-I-L-I-O-N. I mean, that's a potential 50x increase. That's not just growth. That's a complete paradigm shift for how capital markets are going to work.
Okay, so we've seen the massive numbers. Now for the $1 million, or I guess $16 trillion question, what in the world are these real-world assets everyone's buzzing about?
So in a nutshell, RWA tokenization is basically creating a digital version of an ownership certificate, a token, and putting it on a blockchain. It's kind of like having a digital deed to your house or a digital receipt for a piece of art. The cool part is that this digital proof can be verified, traded, and managed online anytime, day or night.
And the list of what can be turned into a token? It's pretty much endless. Seriously. We're talking about huge things like a skyscraper in New York, or something as classic as a gold bar sitting in a vault. But it doesn't stop there. Think private loans, company stocks, famous paintings, patents, even a whole fleet of cars or carbon credits. The basic rule is, if it has value in the real world, you can probably put it on the blockchain.
Okay, that's all really cool, but it brings us to the big so what question. Why bother doing all this? How does turning, say, a building into a bunch of digital tokens actually create more value?
Well, this chart tells the whole story. Let's think about traditional assets, like buying a building or investing in private equity. They're usually super hard to sell quickly. That's what we call illiquid. Access is usually for the super rich. You have to buy the whole thing, and a single transaction can take days. Tokenization just flips that whole model on its head. Suddenly, assets are liquid. Anyone can get in on the action with what's called fractional ownership, so you can literally buy just a few digital bricks of that building. And transactions, they settle in minutes. It's a total game changer.
And you might be wondering how this all works behind the scenes. Well, the process is actually pretty straightforward, broken down into 3 main steps. Step 1 is the legal stuff, getting all the paperwork and valuations sorted out in the real world. Then step 2, you create a smart contract on the blockchain. Think of this as the digital rulebook for the asset. And finally, step 3, you issue the tokens to investors. From there, they can hold on to them, trade them, it's up to them.
So what's the fuel in this rocket ship? It's really a combination of a few key things. The absolute biggest driver is that the big institutions are jumping in. We're talking about giants like BlackRock. When they get involved, everyone pays attention. On top of that, there are new ways to earn returns, or yield. Regulations are getting clearer, and you've got all the built-in benefits of blockchain itself. Things like being super transparent and efficient.
All right, so let's zoom in a bit. Who are the actual players building this new world, and what are the biggest trends we're seeing?
This whole thing isn't just one company, it's a whole ecosystem popping up. You've got crucial infrastructure projects like Chainlink, which is like the data messenger between the real world and the blockchain. Then you've got platforms like Ondo Finance, which are focused on tokenizing things like government bonds. You even have specific tokens for specific assets, like Pax Gold for, you guessed it, gold. And then you have asset managers like Maple Finance bringing entire markets, like private credit, onto the blockchain.
And one of the hottest trends right now, the one everyone's watching, is in private credit.
Historically, this has been a super murky, insiders-only kind of market. But by putting it on-chain, tokenization is basically shining a huge spotlight on it. It's creating transparency and making it possible for way more people to get involved in a market that used to be a very exclusive club.
Okay, so let's bring it all home and look to the future. That road to $16 trillion, what does it actually look like? Well, it's packed with opportunity, for sure. But let's be real, it's not going to be a perfectly smooth ride.
Yeah, there are definitely some bumps in the road to figure out. For one, the rules and regulations are still a bit of a gray area in some places. There's also what we call counterparty risk. You basically have to trust that the company issuing the token actually has the asset they say they do. And of course, with any new tech, you've got risks with the code itself and the possibility that smaller niche markets won't have enough buyers and sellers. These are all real hurdles, but the good news is a lot of smart people are working hard to solve them.
But if you look past the hurdles, the vision here is just wow. The experts see a future where you don't have one app for your stocks and another for your crypto. Imagine a world where everything you own, shares in a company, a piece of real estate, your digital collectibles, it all lives together, managed seamlessly from a single digital wallet. That's the endgame.
So, if you take away just one thing from all this, let it be this. RWA tokenization is so much more than just making a digital copy of something. It's about transforming these clunky, illiquid assets into what you could call financial Lego bricks. They're programmable, they're liquid, and you can snap them together in new and interesting ways. We're literally building a brand new, more open, and more efficient financial system with them.
And that really leaves us with a pretty mind-bending question to think about, right? As this tech makes it possible to own a tiny fraction of literally anything, it's going to completely rewire how we think about ownership. So as that line between the physical and digital worlds gets blurrier and blurrier, the big question isn't if this will happen, but what's the next thing we're going to choose to tokenize and own next?